Do you ever have questions about your property taxes? Are you bewildered by terms like maximum assessed value, and compression? Do you wonder why your property taxes might be a little bit higher this year than in years past? It can get complicated. But despite physical appearances, every property is different, taking into account variables such as when and where it was built, what improvements have been made, and when it was last assessed by the county assessor. This video is designed to answer some of those frequently asked questions and provide a little bit more clarity the next time you get your tax statement.
Property taxes are based on Measure 5, passed by voters in 1991, and Measure 50, passed by voters in 1996 and implemented in 1997. Measure 50 and Measure 5 were designed to limit property taxes. Measure 5 was designed to put a cap on the amount of property taxes going to schools and governments, while Measure 50 was designed to limit assessed values and create more predictability in property taxes. So how does it all work? First, we must define real market value, maximum assessed value, and assessed value. Real market value is appraised each year by Multnomah County. It is the county assessor's estimate of your property's value on January 1st of each year. The maximum assessed value is the upper limit of an assessed value for your property, which was established by Measure 50. A property's assessed value is the lower of the two, its real market value or maximum assessed value. The assessed value is the baseline to calculate your property taxes. Measure 5 is a tax cap based on your property's real market value. It limits the amount of taxes applied by taxing districts such as schools or local government. Schools are limited to $5 per $1,000 of real market value, and government is limited to $10 per $1,000 of real market value. But it can include exclusions, such as a bond approved by voters. Measure 50 created an assessed value limitation independent of the property's real market value. Measure 50's maximum assessed value was established in 1997. The maximum assessed value is based on 1995 property values minus 10%, with an annual 3% growth cap. The maximum assessed value is the only place where the 3% limit applies. This does not mean your taxes will only go up by 3% each year. Your taxes can increase with bonds or levies approved by voters in your taxing district, or may decrease when those bonds or levies expire. There are also exceptions to Measure 50's 3% growth cap. This includes new construction or additions of more than $10,000 in 1 year or $25,000 over 5 years, remodel or significant rehabilitation of more than $10,000 in 1 year or $25,000 over 5 years, partitioning or subdividing property, and rezoning, where the property is used consistently with the new zoning. What is compression? When real market value, Measure 5, and maximum assessed value, Measure 50, are compared, the lesser of the two determines property taxes. However, when real market value is less than the maximum assessed value, you will see a lower tax bill. This is called compression. Your property taxes are compressed or reduced to Measure 5 limitations, taxes that would otherwise be higher under Measure 50. However, as market value rises, the real market value can become greater than the maximum assessed value. If the market increases by more than 3% in 1 year and the assessed value and the real market value are the same, the assessed value can increase by any percent until it reaches the maximum assessed value. Remember, tax amounts are not limited to a 3% increase from 1 year to the next. The maximum assessed value is the only place where a 3% limit applies. So as your property grows, so does your assessed value. That growth can be more than 3%, and you will see a higher property tax bill. So why are my taxes higher than my neighbors, even though we live in the same neighborhood with similar properties? Measure 50 was designed to create predictability, not equity. Generally, your taxes could be higher than your neighbors because your property value is higher than your neighbor's assessed value, real market value, or both. This can be caused by improvements to the property made in prior years, differences between your property and your neighbors, such as the year built, square footage, lot size, condition, construction quality, or other differences. And your neighbor may have an exemption on their property, such as a 10-year tax abatement, veterans exemption, historic exemption, or an exemption by ownership. And in some cases, properties in close proximity with similar values may be in different levy code districts. Plus, fluctuations in the housing market can also impact tax bills. In short, there are many reasons why tax bills can differ. To be sure, you can always check your property value, how much you owe, property description, and more by visiting multcoproptax.com. You can also use Multnomah County's Tax Graph tool to see how your property's value and taxes have changed over time. Just visit multco.us/assessment-taxation. Finally, if you have any questions or concerns about the market value on your tax bill, you can always call a county appraiser to conduct an on-site appraisal of your property to determine if county records are correct.